A 5,000% return in just 5 years is absolutely incredible. If we would have invested $10,000 in this company 5 years ago, we'd have $500,000 right now. Not bad. We can compare this against the S&P 500's return of 72% over that same period, which would have turned our $10,000 into $17,000. Still not bad, and certainly better than cash. And the crazy thing is, you've definitely heard of this company, and you've most likely tried their product. In this video, we'll cover this company to see if it's a buy today or not. And if it isn't a buy today, then we'll take a look at how we, as investors, can make sure the next time a company ascends like this, we're ready to recognize that it's public, do our due diligence, and if it matches our investing criteria, scoop it up before it blows up. The company that I'm talking about is Celsius, maker of the healthy energy drink. If you've been with us for a while, you know exactly where I'm about to go. Before we start any conversation about a company, we have to understand the business today before we can make predictions about the business tomorrow. And that all starts with how they make money. To understand how a business makes money, we go straight to the source, the company's annual report. My favorite way to get there is to head to the company's Flank company page, head into the How Do They Make Money section, and then go to the annual report, which came out earlier this month. Once we have the annual report open, we head straight to my favorite section, Part 1, Item 1, Business. One of the fun things to point out that's first stuck out to me when I opened up their annual report is that they can't call their energy drinks healthy, so they describe them as functional energy drinks. That's probably because they can't claim that they are healthy. Anyone else remember when vitamin water got sued over their health claims? And one of their lawyers literally said in court, quote, "No consumer could reasonably be misled into thinking vitamin water was a healthy beverage." Assholes. Luckily for us, Celsius is a really easy business to understand. It's a non-alcoholic beverage company. They say in their annual report that their flagship asset, Celsius, is marketed as a fitness drink or supplement, which, with exercise, is designed to accelerate metabolism and burn body fat while providing energy. That's a pretty useful use case. Again, they're beating around the bush of being the healthy energy drink. And then if we continue to scroll down, right in this section, they call out a very important distribution relationship that they have with Pepsi. From researching other beverage companies in the past, I know that the beverage game is largely a game of distribution. And having a large company like Pepsi or Coca-Cola or Keurig Dr. Pepper helping you handle your distribution is a huge competitive advantage. They have 3 product lines: Celsius, the can that most people probably know, then Celsius Essentials, which contains amino acids, and then Celsius On The Go, which is the same product just in a powdered form. I like that they're not just adding a bunch of new product lines with their growth. They're being prescriptive about what they're releasing, and that is a sign of a skilled operator. Then they go on to say that they manufacture, but they use well-established co-packers. And they also talk about having a resilient supply chain, not relying on one single supplier. All right, the next step in understanding the business is to see if the business is growing. If the business is growing, then we can think if the business will continue to grow. But we're getting ahead of ourselves. As you'd expect, this company is growing like wildfire. Just over the past year, revenues are up 100%, net income's up almost 200%, and assets are growing at 25%. Their net operating cash flow is also up 30%. Taking that back to the 5-year mark, they have a 5-year compounded annual growth rate of revenue of 90% and assets at about 113%. One of the problems is net income and net operating cash flow have been jumping around a good bit. That's not uncommon to see with a growing business, but it isn't our favorite thing to see. We would like to see more consistent growth. As I alluded to earlier, the last part is understanding how Celsius can continue to grow into the future. That's one of the key things we want to look for. We want to look for companies that are capable of compounding long into the future. And this is where, in my opinion, the company gets their first knock. In the annual report, we don't get a letter from the CEO. This isn't objectively a negative thing, but for me personally, I really like to see a CEO's letter to shareholders at the top of the annual report. This means that the CEO has a vision and respects the true owners of the business, the shareholders, enough to tell them what's going on at the business. So I'll have to continue to dig around the annual report and other interviews and earnings calls to try to see what the CEO's big, audacious goal is. And if he doesn't have one, that is a deal breaker for me. Granted, they do sell caffeinated sugar water, so the big ambitious goal might be to just sell more caffeinated sugar water. And their CEO had this interview on CNBC.
We're breaking records each and every day. The foreseeable future is to be number one in the energy category, and that's what we're working on.
And they reinforced this in their annual report, that energy drinks are growing and that this is a healthy energy drink without saying it's really a healthy energy drink, which I really do find funny. And they also talk about their partnership with Pepsi. So the same thing that they talked about in the interview, they kind of mentioned, but this doesn't seem like a big ambitious goal that we like to see. So I guess if I had to name one, I would say that he wants to become the largest energy drink maker in the world. That's not the worst thing ever, and it's nice when a company is focused on taking up the space that they occupy, but that doesn't really excite me as an investor, unless there's an opportunity to make a lot of money. So if the CEO's dream is fulfilled, how big could Celsius get? Let's assume that they become as big as Monster Energy, their largest competitor. Monster currently has a market cap of $55 billion. Compare that against Celsius's $17 billion. When we compare their multiples, Celsius is trading at a price to sales ratio of around 13, and you compare that against Monster's price to sales ratio of 7. So without running a full valuation model, which is step 5 of our framework, we can tell that this stock is a little bit expensive right now, and I think the market is baking in their potential upset. With all that, I do like where the company is going, but would need to see this continue to drop in price before I consider taking a position. If the stock price falls by another 20 to 30%, I will sharpen my pencil and really get into the numbers. But for now, I see the upside as already baked in. But I could be wrong here. If this company is the next Monster, Monster is one of the best performing stocks of the last 20 years. So this thing could continue to grow. It has a growing industry, a growing segment, and it's on the tailwinds of a health-conscious culture. And they haven't even started with international growth. So there is a lot of chance for upset here. And I'll be honest, had I known that Celsius was a public company when I first tried it back around 2019 or 2020, I probably would have ended up buying the stock. I remember seeing it organically all over social media and seeing people in the wild drinking it. I saw it popping up everywhere around me. And that's the best time to invest in a company, or at least look into them. So with that, how do we make sure that the next time we catch these ascending brands, we can catch them early and ride the upside? Because there are definitely companies like Celsius that are ascending today. And I think it comes down to a few things. First, if intelligent investing was more social, we'd be able to hear about these things earlier through other people finding these public companies and writing analysis on it. And that's a big part of what we're building at Flank. A lot of social investing sites focus on the what you're buying, but never the why you're buying. By seeing someone else's analysis about an emerging brand that you've heard of, that could be a great trigger to start doing your own due diligence. I had no idea Celsius was public until I just randomly Googled it one day. That's all for this video. If you enjoyed it, please consider liking and subscribing. Our mission at Flank is to tangibly reduce the wealth gap by empowering individual investors and restoring stakeholder capitalism. We're early in our journey, and we hope that you'll join us. Until then, keep on rocking in the free world. We'll see you next time.